Good afternoon, ladies and gentlemen, and welcome to EDFI's Thematic session on inclusive financing solutions for Africa's entrepreneurs. I'm Bruno Wenn, the chairman of EDFI, the Association of European Development Finance Institutions. EDFI represents 15 bilateral development finance institutions based in Europe. As development finance institutions, we provide a large portion of the European development finance for the private sector and low and middle income countries to promote job creation and sustainable economic growth. A year ago, at the first Finance and Common Summit, we have launched a coalition for sustainable inclusive recovery for the private sector with a particular focus on the response to the COVID-19 crisis and on the critical role of inclusive finance for micro, small and medium-sized enterprises in Africa. Together with FinDev Canada, the US International Development Finance Corporation, the regional institutions such as African Development Bank, the Islamic Corporation for the Development of the Private Sector, and the Banque West Africaine de Développement, we have acknowledged the urge to enhance cooperation amongst ourselves, but also the strengths in our diversity and complementarity. Our joint commitment to dedicate at least $4 billion for African micro, small, and medium-sized enterprise by the end of 2021 also includes a pledge to deepen cooperation among DFIs to ensure inclusive financial solutions were developed to support the private sector in Africa. By the end of 2020, the coalition members together reached a third of their $4 billion target, collectively committing $1.3 billion in financing towards micro, small, and medium-sized enterprise in Africa, a notable achievement considering current market circumstances. We have also welcomed a new member in the coalition, the Trade and Development Bank. As we approach the end of 2021, we are very much confident that we at the coalition will be able to achieve our ambitions, illustrating the critical counter-cyclical role of development finance institutes. Building on our coalition, the participants of the Summit on Financing African Economies held in Paris on May the 18th have launched the Alliance for Entrepreneurship to boost growth and jobs, and the partners of the coalition will continue to support jointly with the multilateral development banks the development of the African private sector, micro, small, and medium-sized enterprise, including women and young entrepreneurs. I'd like to thank the panelists for joining this very important debate today. And with further ado, I give the floor to Laure Blanchard-Brunac, Director for Policy and Partnerships at EDFI. She will be our moderator today, live from the Summit studio in Rome. Ciao, Laure.
Good afternoon, everybody. And it's a pleasure to be here in Rome today with our host, GDP and IFAD, for this second Financing Common Summit. Well, I will be your guide for the next few minutes of discussions with our high-level panelists. We have with us Mrs. Wangari Wamae, who's the Group Executive Director for Equity Group Holdings in Kenya. We have Mr. Antti Pekka Karhunen, who's a Principal Advisor at the European Commission for the Directorate General for International Partnership, and soon to become the Director of the Economics Directorate in the same Directorate General. We have Mr. Sérgio Pimenta, who's the Regional Vice President for Africa for the International Finance Corporation, the IFC. And last but not least, Mr. Stefan Nalletamby, who's the Director for the Financial Sector Development Department at the African Development Bank. But first, before we start our panel discussion, let us hear the messages we got from the ICD, the Islamic Corporation for Development of the Private Sector, with Mr. Ayman Sejiny, the CEO of the ICD, and Mrs. Ugochukwu, who's the CEO of the Tony Elumelu Foundation.
Bismillah ar-Rahman ar-Rahim, wa salatu wa salam ala Sayyidina Muhammad. Dear ladies and gentlemen, It's a great pleasure for me to be here today in this very important Finance Common Summit. We are all aware of the COVID-19 pandemic. It's an unprecedented pandemic, but nevertheless, the SDGs have presented a great way to work on such pandemics and have it overcome. The SDGs, since its inception in 2015, have been proven as a great tool to overcome pandemics, economic, and other environmental challenges. Hence, we as ICD, the Islamic Development Bank private sector arm, are supporting in all directions possible. We have been participating in the G20 and also making sure that we support the SDGs all over our projects and transactions. And hence, I would like to ensure that the policymaker harness and support the private sector to overcome the COVID-19 through the SDGs and ensuring that we as ICD will always be there to support. Thank you very much.
The ICD, the Islamic Corporation for the Development of the Private Sector, is a great example in sub-Saharan Africa, supporting several vital sectors such as cotton in Burkina Faso or groundnuts, like here in Senegal.
The first step is to allow the company to remain intact, standing. During this phase, what had to be avoided was that the company suffered the effects of the pandemic, shut down operations, and afterwards struggled to restart.
We are 300 kilometers southeast of Dakar, in Karhunen, exactly where the Lansar company has known a solid growth in groundnuts since 1997. A strategic sector for Senegal, which supports a large part of the rural population. Today, executives of this SME have high ambitions and are preparing for the emerging global demand recovery.
Our goal is to process 100,000 tons per year. Thanks to the ICD, we have other institutions that have joined. The BOAD came, the AfDB came, Afrexim Bank is accompanying us. Today it is a moment of pride for BNDE to have supported more than 70 companies to the tune of 7 billion CFAF and helped to have saved more than 7,000 jobs during this period.
Burkina Faso is a good illustration of how development institutions and private banks can successfully put in place financial resources that meet the needs of SMEs in the face of COVID-19. With an annual production of nearly 3 million tons of cotton, the so-called African white gold is the other economic pillar of West and Central Africa. On its own, it supports 15 million small producers and accounts for 40% of export earnings. But this idyllic picture should not hide the difficulties encountered by SMEs in the sector, which have to face the vagaries of the climate and world prices, and for 2 years now, the economic and social impact of the pandemic, like here in Burkina Faso. In this case too, a partnership between a private bank, Chorus Bank International and ICD, enabled to set up a credit line to meet the needs of these Burkinabe SMEs who wish to strengthen their transformation capacity. Burkina Faso is only transforming 5% of its production today and meet the increase in international demand after COVID. It's the plan of Sakoma. Development banks, as well as public and private banks, are striving to sustain African economies, and their work are now starting to bear fruit. These moves will allow African SMEs to once again play the leading economic and social role they played in their country before the pandemic. For the IMF, if in 2020 Africa recorded the largest drop in its GDP for 20 years, it should return to an estimated growth at around plus 3.4% in 2021.
For this video from our colleagues from ICD, and also the coalition that Bruno mentioned earlier, ICD has been a very active member together with EDFI, the coalition we launched for private sector recovery at the last Financing Commons Summit last November. So now we have a message from Mrs. Ugochukwu, who's the CEO of the Tony Elumelu Foundations, which is focusing on entrepreneurship in Africa.
My name is Ifeyinwa Ugochukwu, and I'm the Chief Executive Officer of the Tony Elumelu Foundation. Let me start by thanking EDFI under the leadership of Bruno Wenn for being a relentless champion of entrepreneurship empowerment as a key pillar to economic development and poverty alleviation. Thank you too to my valiant colleagues in the development finance institutions in Europe, Canada, and the United States. Your tireless work is hope for every bright-eyed young female African entrepreneur who would otherwise be marginalized and left behind. It is an established fact that the epicenter of the economic impact of the COVID-19 pandemic is Africa. With the devaluing currencies and the decimated industries such as tourism and hospitality, MSMEs have had one tough year. It's not all bad news though. Private equity fundraising in Africa topped over $1.3 billion for the first half of 2021. This is in contrast to just $700 million in PE funding recorded in H1 2020 as well as H1 2019. So, for all intents and purposes, the growth trajectory of private equity funding in Africa mirrors the gradual stabilization of Africa's macroeconomic environment. In fact, if we take a walk down memory lane, we will see significant strides in access to finance in the last 5 to 7 years. Because in 2015, African startups raised a meager $400 million compared to $2 billion raised in 2019. We have had great success stories like Flutterwave and Chipper Cash, both raising $35 million and $30 million respectively. So access to finance is on the up, but can we truly say the same for financial inclusivity, especially with regard to women and youth, who make up 80% of Africa's MSMEs. Through creative and alternative financial instruments, we need to prioritize the missing middle. That young, bright-eyed entrepreneur who is just starting out with little or no assets, no track record, needing upwards of $5,000 to $500,000. This is not only the missing middle, but the lifeblood of any economy. MSMEs in Africa create 70% of the jobs on the average. If job creation is our objective, then we must have a plan for this segment, a bespoke plan that doesn't crowd them out with high interest rates or collateral requirements. My only mandate for our discourse today is to push the whole of society approach, which can be achieved by a blended finance model, a multi-donor trust fund with a three-pronged grant, debt, equity approach, which means all the different ecosystem players coming together to form a continuous chain of support, leveraging the immense amount of intelligent data that can be generated from such a holistic approach. A classic example is one of our beneficiaries, Mario Egi. He is a blockchain enthusiast, bright-eyed and young, founder of Kite Financial, whose first seed capital was the $5,000 he received from the Tony Elumelu Foundation, together with training and mentoring. He has just recently secured $240,000 from a VC based in Silicon Valley. What if we created a one-stop shop, a multi-donor trust fund that would have stakeholders like the Tony Elumelu Foundation to provide the 5,000 seed capital needed to prove his concept and start his entrepreneurial journey? And then we would have other stakeholders, other partners, who through the same fund would then provide debt or equity, because then we would have de-risked Mario. Mario would be known and trusted, not to mention access to immense data on the system for all to see. If we want to see real impact on the continent, we must populate the missing middle. Collaboration is key. we can do this. EU's global response to the COVID-19 pandemic has been the most comprehensive. Team Europe is mobilizing 46 billion euros in support of partner countries. What will it take to dedicate just 0.5% of that fund to financial inclusivity, specifically for youth and women? Not via credit guarantee schemes with risk-averse local banks that never listen, but through creative and bespoke financial instruments that ensure that the demographic that has been hardest hit by the pandemic receives the liquidity and stimulus it needs to realize its potential as the demographic with the greatest capacity for job creation in the wake of the COVID-19 pandemic. Thank you so much, ladies and gentlemen. I'm looking forward to the discussions.
Well, very concrete proposal from the Tony Elumelu Foundation, and I'm sure we will come to that in our live debate right now. So we will start with an obvious question that was raised already in the video messages, which is an obvious question when we talk today of financing solution for African entrepreneurs. It's the COVID response of all our institutions, the public development banks. So we will start with Stefan Nalletamby, who's a Director for Private Sector Development in the African Development Bank. Hello, Stefan. Good to have you on our panel today. Thank you for joining us.
Yeah. Good afternoon. Hope you can hear me well.
And I will ask you, as the representative of the African Development Bank, you know, we've been together in this coalition that we launched last year in the midst of the pandemic. It was November 2020, and we really wanted together to focus, give a focused point on a sustainable and inclusive recovery for the private sector in Africa. And you're obviously at the forefront of that at the AfDB. So could you provide us an update on your commitments, what you've done so far, especially in response to COVID-19 towards the MSMEs on the continent?
Let me first of all thank you for inviting the AfDB to participate in this very interesting discussion and the Finance and Commons Summit more generally. So the impact of the COVID-19 pandemic on jobs and livelihood has been severe, as we all know. And assuming the overall labour force participation and employment rates remain the same, the bank projected that African countries needed to create an average of almost 1.7 million jobs per month before the COVID crisis. So you can imagine how that number must be today. And it's even more severe for the youth, as they're already twice likely to be unemployed than adults. The AfDB, for the crisis response facility, really supported governments, mainly, to handle the crisis. And within that financing that we provided, we didn't only address health issues, but also the socio-economic crisis resulting from the lockdowns. But there also was a component for MSMEs, so the private sector was not forgotten, but was not leading the crisis facility from the bank's perspective. Typically, our support to SME interventions comprises one of the following distinct approaches, and it's very similar to what others are doing. First of all, it's improving access to finance through financial intermediaries. Secondly, it's capacity building. Thirdly, it's improving access to markets and value chain development. And finally, creating an enabling environment, which is crucial. The bank has designed and undertaken various initiatives in support of MSMEs. There are about 11 of them, and I'm not going to go through them. Early stage businesses and startups, but I will mention one or two. And before that, I'd just like to say that we have managed to catalyze, because our goal is to catalyze private sector and partner financing, and of course is why we are coming very much closer to EDFI to hopefully be able to achieve that. And for the moment, we've actually provided close to 330 million financing for non-sovereign MSME initiatives through these different 11 initiatives that we have. And that has crowded in another $1.07 billion. All this is in dollars. So it has been relatively successful. Just one or two examples very briefly. First of all, the Africa MSME program that supports African financial institutions of Tier 2 and Tier 3 banks and specialized non-banking FIs. It provides long-term liquidity through lines of credit and guarantee products with a technical assistance component for both the FI and the SMEs that are being supported by these FIs. The second one is the Enable Youth initiative that aims to create business opportunities and decent employment for young women and men along priority agriculture value chains by supporting creation of an enabling environment, provisioning of entrepreneurship skills, upgrading of technical skills, and encouraging adoption of innovative agricultural business management practices. And we have been actually working with the Tony Elumelu Foundation in this area. I think I'll stop here for the moment. Thank you.
Thank you, Stefan. We will turn now to Mary Wangari Wamae, who's the Executive Director for the Equity Group Holding. Equity Bank has very much responding quite fiercely to the COVID crisis. So there's been a few deals done with the European DFIs that EDFI represent. And could you tell us, Mary, what informed your response to the pandemic? What were your strategies on the ground to respond especially to the needs of the MSMEs?
Yeah, thank you. We were, first of all, was to understand the crisis and what it meant for our customers. Because I mean, like everyone else, we were taken by surprise, and not our customers, not even ourselves understood the severity of the crisis initially, where it was going, where it would end. We didn't know that. So the first thing we did was a quick social intervention, and that was supporting the health aspect of the crisis by donation of PPEs worth about $17 million in collaboration with our partners. That sort of eased the pain on the ground in terms of containing, defending or protecting the health workers on the ground. And then we also had to look at the impact that the same was having on our customers, their ability to service their debts because the economy had come to a standstill. All businesses were closed at some point. And here we got several interventions. And the first one was offering the loan moratoriums. We actually had to convince some of the customers that they needed a moratorium on their loan, because most of us thought this thing would be over in 6 months or 3 months. Some thought it's going to be very short term. They had actually refused. And we told them, looking at our own projection and our analysis, we think that this crisis will go on maybe up to 3 years. So it is important that you prepare yourself. And we got moratoriums depending on the sector that the customer is operating in. Some got 6 months, some got 12 months, some got 18 months, others went up to 36 months, especially in the very highly hit sectors like tourism, hospitality, hotel, accommodation, etc., etc. And that eased their pain. So we restructured about 40%. Sorry, we gave moratorium about 40% of the book initially. But what is actually quite impressive now is that most of those customers have actually gone back to normal repayment. We only have about 11% still struggling. And this is, of course, in the more hit sectors like tourism, real estate, etc., etc. And we think that that has really helped. We also made concessions in terms of fees on transactions, encourage customers to go to the mobile and the digital channels. Right now, we have almost 98% of the transactions in the bank happening outside the banking hall. They are on a mobile, internet, agency, etc., etc. And that creates a lot of convenience for these customers, and they can also transact in a very safe manner. We also restructured some of the book in terms of giving the customers longer tenors, depending on the sectors they were in, so that they're able to continue their business even as they meet their liabilities to the bank. So a lot of this is done on a case-to-case basis. Some of the sectors actually requiring a longer term accommodation than others, depending also on how strong their business was initially. We have given new loans, actually in the face of the crisis. Believe it or not, the bank has grown its loan book 30% in the last half of 2021, which is a clear indication that the businesses are rebounding. So they are coming for new loans, and some are doing top-ups of the existing loans, and that is really helping them. We also got support from our partners, a lot of them represented on the table, the DFIs, IFC, FMO, DEG, Propaco, AfDB, African Development Bank, and others, by giving us either long-term syndicated facilities, which we're able to on-lend to the SMEs, and also we also got risk-based sharing guarantees. Some of them are actually going up to 75%, and that has given the bank the ability to lend more to these enterprises. And we are seeing a rebound after the crisis. So I would say all in all that the crisis presented us an opportunity to understand our customers' businesses a little bit more, so that we're able to support these customers on a case-to-case basis. We also played an advisory role because some of the customers, we had to tell them, maybe it is good to relook at the business model that you have been practicing, probably look at diversification of your business or a completely new line of business. And some of them were able to actually start completely new line of businesses very successfully. And within a year, we have seen those businesses doing very well, something they had not even thought of ever trying before that. So I would say that the support of the partners, the Team Europe and other partners helped us a lot in terms of supporting our customers to weather the storm. But more importantly for us is not just weather the storm, but also actually build very, very successful businesses in addition to recovery from the crisis. Thank you very much.
Thank you, Marie, for this testimony and experience. It's extremely good to have you on our panel to give the experience of what you went through with your clients, and we can see the level of energy and commitment you've given to address their needs in these challenging times. So I will turn now to Antti Pekka Karhunen, who's the principal advisor to the Director General in DG INTPA, and DG International Partnership at the European Commission. Welcome, Antti. We have
Hello, I hope you hear me.
Hello, and we have you with us, and I mean, you represent the EU here, a large donor for MSMEs in Africa, both working with European DFIs, but also with IFC, who's represented by Sérgio on this panel. Could you give us an insight of what the EU response to COVID-19 has been when it comes to MSMEs in Africa, and what was there? There was earlier Marie mentioning Team Europe, so that might be something you want to explain a bit further. Thank you.
Well, thank you very much, Laure, and let me thank also Bruno, Wenn, and EU DFI in particular for having called together this panel and having invited the European Commission. And I also apologize that Koen Doens, our Director General, was not able to join today. That's it. So we are really very committed to work with the PDBs and with the DFIs to seek solutions and common action for sustainable development. And of course, looking at the situation post-COVID, the financing gap towards the SDGs has really reached an alarming figure. We have a figure of 4.2 trillion USD that we can use. And also we've revealed disturbing inequalities which have reversed quite many years of progress towards the SDGs. People, almost 100 million people falling into poverty and up to 200 million people losing their jobs. So it's a huge challenge for us to work and build back better. Our global response from the EU indeed has been quite comprehensive. In the short term, first, it amounts to some 40 billion of support to our partner countries through this Team Europe, which I'm very pleased to hear references to. Of course, that's a joint effort of the EU and our 27 member states, really a new way of trying to work jointly in a very coherent manner as a team Europe, and this is something that we will want to continue very much going forward over the next years. With that, we have geared support to help create fiscal space in our partner countries. We're sharing vaccines. We've contributed to COVAX, and of course, moreover, we support the issues like SDR allocation and debt relief efforts. But we do need a medium and long-term measures also to build resilient societies, and the pandemic has really revealed obviously the fragility of health systems. So one of the issues that we are doing now is working with our African partners to help build capacity for manufacturing pharmaceutical products and vaccines, and this is something that is a very promising flagship of our Team Europe initiatives. Now, Ugochukwu from Tony Elumelu Foundation asked a direct question, so I'm very pleased about that, and thank you for that. We have an excellent collaboration with Tony Elumelu Foundation, and we share the same objective, and I very much agree that women, youth, the missing middle is the lifeline of economy. And in this context, I mean, this is an essence of also a joint program that we do with Tony Elumelu Foundation, supporting specifically women entrepreneurs so that they can access the TEF Foundation's training. And this includes also sort of the second arm of financing support to acceleration program and the second stage financing. So I think it's one of those good examples of creative and bespoke programs that she referred to. So we are really very keen to support inclusive financing solution for African entrepreneurs. And let me just take still one more example. We have very recently launched an Investing in Young Businesses in Africa program. This was announced by our President Ursula von der Leyen in the Paris Summit of Financing of African Economies. And just in a nutshell, we will provide financial and technical support to pre and early stage MSCs in Africa. They will focus on women and youth-led companies, especially in digital and green sectors. We want to unlock equity to help them start their businesses, and we will also support the entrepreneurship ecosystem, so skills, training, capacity building, supporting digital finance. And we will use grants and technical supports, but then also our financial specific products so that we can address both the environment in terms of regulatory and legal reforms, but also help de-risk some of these activities. So just to recap, we are there to support our partners, creating the right conditions for the local private sector to flourish, and particularly having an eye on the MSMEs. And we will do so through facilitating access to finance and helping to improve the business environment, which are key elements of our approach. Thanks so much.
Thank you very much, Antti. That gives a great overview of what the EU has been actively doing since the COVID crisis started. Last but not least, we have Sérgio Pimenta here on our panel, who's the Regional Vice President for Africa for the multilateral DFI, the International Finance Corporation. And as one of the largest DFIs, if not the largest, Sérgio, it would be great to hear about IFC's strategy to help boost support to MSMEs in Africa during this tough period. Over to you.
Thank you very much, Laure, and it's a great pleasure and honor to be on this panel with all of you. So thank you for the opportunity. As you mentioned, IFC within the context of the World Bank Group has really done a lot of different initiatives to support small and medium companies in the context of COVID. I think the previous panelists and mentioned very clearly the importance of MSMEs in the African economy. So I don't need to remind everybody of the data and the numbers of how important this is. But whether it comes to questions of employment, economic activity, of linkage within the economy, and many other aspects, it's very clear that MSMEs is the area that we should all be focusing on. This was, and it was mentioned before, this was one of the important areas of focus before the pandemic, and this is becoming even more so with the pandemic in our hands. One of the aspects that is important for MSMEs is access to finance, and financial inclusion in general is a question that we've been really trying to address and trying to help with a lot of partnerships, with a lot of collaboration with many of the institutions, including all those that are on this panel here with us. So it's really a collective work that we are all doing. It's not just IFC working by itself. But let me try to answer more specifically your question on what IFC has been doing to respond to the pandemic. I mean, as soon as the pandemic hit in March 2020, we quickly launched what we called a fast-track COVID financing facility. It was an $8 billion facility, global facility that aimed at providing liquidity, very quickly liquidity to our existing clients, and this was a way of, I would say, quickly help and address the first shocks of the pandemic. We did expand this facility further on, and a few months later, I mean, towards the end of the year, beginning of this year, we expanded it by what we called a program called Base of the Pyramid. And this Base of the Pyramid program was an additional 400 million, which was really focusing on microfinance, on non-bank financial institutions, and on banks that are specifically focusing on MSMEs. And this program was also expanded to not just IFC clients, but also to new partners and new clients. And this has been, I think, a very effective way of helping MSMEs across the world and in Africa in particular. We also launched something that, while not financing, it's on the advisory side, has been really appreciated and by many financial institutions, by many different types of companies that are playing or are being active in the digital access to finance space, has been an advisory program focusing on designing digital financial services. Specifically focusing on retail, on very small enterprises, on small and micro enterprises, and this is a program that we've rolled out with many financial institutions in Africa. The demand has been very strong, and I think it has really accompanied the financial sector as it shifts to a more digital world, which has been one of the key, I would say, acceleration impacts that we see with the pandemic. We had a few other programs. I don't want to give too many details on everything. I'm mindful of the timing, but we did develop a supply chain finance program. This is one of the key drivers to support SMEs. We've also had a very interesting sustainable energy finance program, so that because as the world evolved from COVID-19 and we are building for the future, I think it is important to build back better and to really include all the dimensions of climate change in whatever is done as a COVID response program. So this is something that is important. I still want to give you one number, if I may. I mean, IFC during the crisis deployed significant amounts of funding in Africa. We did have a record high fiscal year FY21 that finished in June. With a very significant increase of our operations in Africa as a COVID response. But when we look at specifically MSME's response, I have to say that out of the almost $5 billion that IFC deployed in the financial sector in the Middle East and Africa, 54%, 2.6 billion, went for programs that are directly supporting to MSMEs. I mean, including a great program with Equity Bank. I'm very happy that being on the panel with Mary here. And this is really, I think, an important part of what we've done. And then my last point is that we did announce at the summit in Paris in May, we did our managing director, Maktar Diop, announced a new $2 billion initiative for financing for trade and for support of MSMEs in Africa. And we are now in the context of our work done for the Alliance of for Entrepreneurship with other partners. We are now implementing this announcement and deploying the $2 billion funding for MSMEs. So I think this is a very important initiative. But I'll stop here. Thank you very much, Laure.
Thank you very much, Sérgio. That gives quite some insight on how active you've been on this front in Africa. Well, I will. We don't have so much time to ask questions to the panel, but I still would like to ask each of you a bit of a more challenging question, pushing you to more thinking what we should do to build back better. We talked about your response and what you're doing, what you've been successfully doing so far, but I think it would be interesting also to hear where you think things could be improved and what are the remaining challenges. So starting with Mari, maybe, you know, with your experience as equity bank when you worked with DFIs, we heard from Sérgio, you work with IFC as well. You certainly are aware of the EU action that was described as Antti. What do you think public development banks and DFIs should do better, or what they could do better to address MSME financing, and especially maybe for the more difficult segment to target, which are the really smaller businesses, the micro businesses, women and young entrepreneurs?
Well, I think it's we are learning as we go on the journey together. And one of the things that we need to focus on is, I think one of the greatest discoveries that we have made over the years as Equity Bank is that these small, medium enterprises require much more than the financing because some of the programs that we have done actually involve the financial component of it, but a lot of the resources are actually going into capacity building, training, financial literacy, entrepreneurship training. We do very basic things like teaching these entrepreneurs and micro enterprises, very basic things like how to keep their records of their expenses and their incomes, almost reconstruct a trial balance and whatever P&L. And we have found that helps them a lot in terms of managing their resources, because we find that most of them are owner-managed businesses. So sometimes the line between the money belonging to the business and the money belonging to themselves for their personal expenses is very thin. And until you create that discipline, then you always run into issues of default and over-indebtedness, because they have to keep on borrowing. Sometimes they take the money out for personal use without any records and all that. And we have tried that. Right now, we have about 2.5 million beneficiaries of the financial literacy program. And that has helped a lot in terms of them being able to manage their businesses even better. We have about 320,000 customers on a more enhanced entrepreneurship training, and this helps them to understand the basic concepts of entrepreneurship, the do's and the don'ts, and they're able to do better in terms of creating sustainable businesses, even as we give them the funding. So one of the suggestions that I would make from my own perspective is that a lot more probably would need to be dedicated to capacity building and advisory services, because the bank will not be able to charge these customers for these costs, but they make a lot of difference. Some of the programs we have done in the agriculture, agribusiness space, we have had to go to the extent of training the farmers on the soil they have, what crops should they plant, for instance. And what has happened is that we have seen an absolutely exponential increase in the productivity of these farmers, and they are small peasant farmers. So small agribusinesses now becoming commercially viable, which they were not before. So if we start thinking about that component of support, then I think we'll be able to build more sustainable businesses, whether it's in manufacturing or other segments or agribusiness, etc., etc. So that would be very welcome. So that we are able to support these customers a little bit more. And I think the other item we have learned that we could do better is in terms of scaling up the support. Under the Young Africa Works, which is supposed to, the aim is actually to create 25 million jobs through these small and medium enterprises. And this is just through the ripple effect of supporting these small enterprises. So right now we have about 320,000 businesses, and we are aiming to do 25 million. So what it means is that the scale of these projects has to be very, very huge. And we are looking into the region. So I think the regional outlook, in Kenya, we have done very well, but we are extending some of these programs to Rwanda. We have started the Young Africa Works program. We are actually above targets in terms of creation of jobs and the start of small businesses and support to them. So if we have more support, both on the advisory capacity building side and the financial component funding side, then I think that will make a lot of difference. And I think, as the representative of the foundation said, we can also think about adding a component of seed capital for the innovators, because we have a lot of young minds that have great ideas. When COVID came, we saw a lot of innovations in the market, including water dispensers, which are locally made, which are very safe to use, which were not there before. So all they need is just a small support, and they are going to be able to build very sustainable businesses and create more jobs. So that is really what I would do. I would say, Laure, on that aspect. Thank you so much.
Thank you, Marie. Indeed, and you stress very much the importance of advisory services, which is key, and we heard it from other panelists earlier in the discussion. Sérgio, on your side, I mean, you stressed a few times, and the others did, how much we actually work together, all of us. And the critique I would put here is that I think we don't make so much the effort of showing that we work together so much. It's something which is a bit under the radar. Do you think the alliance that you mentioned that was launched in May will improve that? Or do you think it can bring some value for entrepreneurs in Africa, that they see that we are all working together on sharing ideas and experience about what works and what doesn't?
Laure, I think indeed the alliance will help on that front, because it's going to be an initiative where a large number of different partners will put together, will bring together their own initiatives of the different programs that they're doing to helping small and medium companies. I think one of the challenges we can see today for a small and medium company in Africa that wants to get support from a DFI, from another development bank, from a regional or national development bank, from different financial partners, is there are many options, but these options are not necessarily known enough. So the idea of the alliance is just to have a very light touch kind of platform where a small and medium-sized company in Africa, a young entrepreneur, a young African man or woman can just find what are the resources that are available to him or her to develop his or her own business. And that's what the alliance will bring. I mean, it's really trying to be one platform where a number of initiatives are brought forward and where different entrepreneurs can have access to more financing for their projects. So I do believe that this is something that can help. In terms of DFI's collaboration, and I mean, this forum is a good example of one of them. I mean, we do have, I think, excellent platforms to discuss, to collaborate, to share experience and share knowledge, and to leverage each other. Because one point that we very often forget is that each DFI, each financial institution that is active in development in Africa has its own specificities, its own value addition, its own approaches. And very often by working together, we can bring different angles of support to the same company. So this is where a good collaboration is always a plus. And I think initiatives like this one or the Alliance will definitely help improve the way we are supporting the small and medium companies, the entrepreneurs in Africa.
Thank you. Thank you very much, Sérgio, and that's great to hear more about what the Alliance will. We look forward to the launch in a few months. So I will turn very quickly to our two remaining panelists with a short question that we need, in fact, to answer in a few minutes. I think we are touching upon the end of our panel discussion. Antti, I see you are on screen. I would like to react to what Ife mentioned as a multi-donor trust fund as a solution to support entrepreneurship in Africa. As a donor, what would be your view and how much that is in line with your thinking on the EU side?
Well, it's a very specific issue. Of course, would need to look into the details of any such vehicle. But generally speaking, I think that working together from the different angles, as I think Sérgio mentioned, will really increase the impact that we will do. But can I maybe use the occasion just to say that for us, we are a political institution. We do have important political objectives. And so as we move forward, we want to work really sort of on a policy first principle. We want to focus on green and digital transition. We want to focus on growth and jobs. We want to work also on peace and security support and address the root causes of migration. I wanted to mention this so that there is a certain logic on which we approach things, and this policy first also has a very inclusive angle. We will look at inequalities and really pay particular attention to women and gender equality, as well as youth. With that political agenda, we hope that we can work together with the PDBs, with DFIs. We are working also on a European financial architecture for development, striving to achieve greater cooperation and synergies among different actors. And I think that's a great overall challenge where we can improve things and I think achieve higher impact going forward. So yes, of course, for multi trust fund efforts, happy to hear more about it, but with this kind of framing, if you wish, as we wish to go forward for the next 7 years. Thank you.
Thank you, Antti. And then we will conclude with Stefan, a quick reaction from you, please, on the fact that obviously on our panel, you are like Mary on the ground in Africa. You're a multilateral African bank. And as such, you might have additional views to what we just discussed in terms of DFI collaboration. So any ideas, and especially whether you see a value working closer with the European DFIs or other multilaterals on some specific topics to address the needs of the MSMEs in Africa?
Definitely. We definitely see value in more collaboration and more, let's say, exchange of ideas, because I think at the end of the day, what is needed is that we make sure that we do address these different issues with different types of instruments, because there is an array of different types of instruments and needs that are there, be they financial instruments and non-financial. And Mary alluded to it, the fact that we need to really deepen our advisory services and the capacity building. And for that, we have to make sure that we have the right mix of instruments to be able to support those issues. We at the bank in particular are looking into new initiatives. In particular, one that we're thinking about is, because all these advances in technology and the ingenuity of our African youth, we want to make sure that support services are there to accompany the entrepreneurs. And we believe that we need to build and scale the youth entrepreneurship ecosystem. And this, of course, with the Alliance for Entrepreneurship, will also help us in that endeavor to reach that type of objective, which is a medium-term objective. It's not going to happen overnight, but we've got to make sure that we have this, let's say, alliance of minds as well, alongside with the governments, because this is another part of it. The local the local stakeholders have to be very much committed and implicated in all these discussions to make sure that they're really basically stakeholders of this new agenda. Because it's the youth, and we have a very young population here in Africa, so we need that type of support. And as was mentioned earlier on by the representative of the Toli Elumelu Foundation, it's not with requests for collateral that we're going to reach out to these needs. We've got to be much more innovative. We need first loss guarantees. We need that type of support. The European Commission has been very helpful for us, and we hope that this is going to continue. But we have to bring it to scale. But also for us to bring it to scale, we need also to make sure that the local involvement and dedication to these goals is also very much in line with our own. I'll stop here. Thank you.
Thank you very much, Stefan. And indeed, involving supporting local governments in their designing the proper ecosystem will be absolutely key to build back better, and especially for the smaller businesses, for support to the smaller businesses. Well, thank you very much to all our panelists for today. I found the contributions and the discussion extremely rewarding, and there are certainly some follow-up points that we have among ourselves that you will hear from very soon, such as the alliance that Sérgio mentioned, but also other partnerships that will emerge. So thank you for that. And Bruno, I will leave you the floor for the concluding remarks.
Many thanks then, Laure, and many thanks also to the panelists, because this was an extremely rich debate, and I'm very much looking forward also to deepen our cooperation and touching on all the different issues that have been mentioned. I like to highlight that once again we have underlined the critical role of the private sector for jobs and economic growth. And as Ifey also mentioned, is if we take this job creation seriously, then we have to focus on female and young entrepreneurs. And we also have done to try to figure out in how far we can provide them also with seed capital. And Mary has also underlined that there's a need to scale up, to do much more. And this also is then very much part of the debate that Stefan mentioned, is that we have to be innovative, and we have to try to figure out how we can help financial institutions in Africa to be much more inclusive and to take more risk, so that at the end we have to provide also risk guarantees. And I think what was also underlined is the need for much more advisory services, because it's not only in order to help small and medium-sized enterprises to have a business model at the end that is financially and sustainable and create jobs, permanent jobs, but also to make them much more resilient, also in terms of climate change. And I would like to combine this with a plea to our shareholders and owners, because in order to be able to provide the much needed advisory services, we as DFIs, we need also then access to technical assistance, grant funding at a larger scale that we have so far. And Antti, looking at you, I think that's also a huge opportunity for the European Commission to help all of us. And the final thing, I liked very much also that the debate has underlined very much the counter-cyclical role of public development banks and DFIs, and that working together we can do much more. And I like also very much what Sérgio mentioned, to have a platform approach where we can make use of the different kind of expertise amongst the institutions, the different kind of instruments, the capabilities and the networks, so that at the end we can provide much more support tailor-made to the different needs of our clients in Africa, that would be great. And with that, once again, I like to thank the panelists and also Laure for guiding us through the session. I'm very much looking forward for the further debate in the best interest of our clients, the financial institutions, and their clients, the micro, small, and medium-sized enterprises in Africa. Many thanks again.